Thank you, Alicia, for meeting with us today. Everyone, this is Alicia Harris from
Hi.
EOP Realty in LA, in Beverly Hills, right? Is that where the office
Yes.
is?
Yeah, our office is in Beverly Hills.
Nice. And Alicia is a longtime friend of ours and kind of our real estate go-to for the area. And so that'd be fun to meet with her and just kind of chat a little bit about what's going on in the LA market and the submarkets that are within LA and around. And just kind of get a skinny on what is going on outside of the Seattle market. Because I know we've been so concentrated on what's going on in our market locally, and people are starting to kind of branch out and move around and what have you. So thank you, Alicia, for meeting today.
Yeah, thank you for having me. So fun to see you.
Yeah. So I guess, do you want to just start a little bit about yourself? How'd you end up in LA and come to be in real
Oh
estate?
gosh, that's a much longer story. We could go very in depth, but the Cliff Notes version, if you will. I went to WSU with your sister, and that's how we met, and ended up moving to LA right after college because I was going to pursue acting and actually public relations. And so real estate wasn't necessarily like a main goal right away, but had always kind of been told all my life, real estate, something you'd be good at, you're interested in it. My dad and I used to always look at open houses together. So I always had real estate in the back of my mind as something I was interested in, kind of casually. Cut to now, I live in Brentwood. I lived in Malibu for a really long time and kind of knew that market and area. But now I live in Brentwood, which is between Santa Monica and Beverly Hills, to give people that don't know a reference point. And my office is in Beverly Hills. I kind of focus on whatever my clients need. I'm at a commercial brokerage firm, and I'm the residential person. We're adding a few more people on now and building out more of a residential side of the brokerage. So that's exciting. Yeah. So really I focus on wherever my clients need to be. And lately, I feel like I've been focusing more on Beverly Hills, but I had a client searching for a long time in the Sherman Oaks area, kind of over in the valley. So I got to know that area and what was going on there, especially during this weird time, if you will.
Yeah, and there's a lot of little submarkets over there too, or
Absolutely.
So, you just had a ginormous sale close last week, which is awesome.
Yes, yeah, thank you. For those of you on here that it was in Beverly Hills on Benedict Canyon, which is a very nice road throughout Beverly Hills that kind of actually connects over to the valley. On the other, it doesn't connect, but there is another Benedict Canyon up the other side. And this was just under $9 million, a really cool estate in Beverly Hills, just due to the fact that you don't have a lot of land in Beverly Hills, or in LA in general, lot sizes, depending on where you are. But this to have a nice large it was a 7,000 square foot house, and then to have an oasis of a backyard mixed in with it is really unique, to kind of feel off and secluded.
Yeah, so it looked really private just from the photos and everything too.
Yeah. And this was a unique situation where my clients, I've been working with them for the better part of a year. We have looked at a lot of homes, and primarily, as I just said, it sold just under $9 million. So a higher price point, and seeing what those homes are doing in the market versus a lower price point, and where they can sit for longer, and be there. But in fact, I was just remembering that about a year ago, one of the first homes I took them to was a home on Tower Road in Beverly Hills. And I just noticed a day or two ago, I got an email that it is finally under contract.
Oh my gosh, yeah.
So that's, goes to show, even in this different market, some homes are sitting much longer. And someone right there that can afford to leave their home on the market for longer.
Yep, for sure.
Will sell.
So talking about, I guess we could kind of jump in, right to the market and what's going on. So in LA in general, how do you feel the market is doing in terms of, let's say, the price points of 2 million and below, and maybe 2 million to 5 and then 5 up?
So in the 2 million below, and in fact, I actually have some clients looking realistically, they're in the very specific 1.3 to 1.5 million dollar range. And that's a tough market. right now, I think, because there's not a ton of inventory in that range that is worth the home. And I think, speaking on that is as where we were 6 months ago, 3 months ago, even, where everything was going so much over and hitting, you were paying over in that price range for whatever value of this home.
Yep.
Now that home is sitting there because is it worth 1.3? It's not going to maybe go for the 1.5 that it might have when you had 20 bids on it. That, like I said, the inventory on that is a little lower, and now you're looking for the right home. That price range of people, unless you're all cash, you're now factoring in your mortgage rates, which, as we know, are so much higher, and so much higher even just in the past month. And that is what I'm seeing is those clients or that price range of people are starting to pump the brakes on looking for a home until we can kind of see they're unsure. When your mortgage, your monthly mortgage payment is going up significantly, and the cost of finding and buying a home and owning a home is so different, it makes people take pause.
Yep. So in short, I guess it would be inventory then in that 1.5 and below. What you're noticing is very limited, or is there more inventory than what there was, let's say 6 to 12 months ago?
And not to contradict myself, it's weird. I feel as though for a minute I was seeing more inventory popping onto the market in that range, and then it died down significantly. And now I feel like there's a little bit more coming on, and they're still coming in at a price where, a seller's market, they're listing them a little high.
Okay.
But I don't feel as though you're not seeing as many 20 offers. It's not escalating quickly. It's sitting for a little longer. It's not going off in 7 days. You've the average days on market has definitely increased.
Yep. So maybe maybe instead of seeing the fluctuation of inventory, because like you hear about, all across the nation, all the inventories increase, like 50%, 60%, like all these crazy numbers. It's probably more so in the LA market that you guys are a little bit more stable in that, because maybe the homeowners are choosing to kind of like just wait things out.
Yeah, just wait things out. And I know we just talked about like the different little pockets, but when I was kind of looking up what it has been, if you're looking at a year ago till now, the inventory is lower in certain areas.
Yeah.
And yet that's a shift from a couple of months ago, as you know, it fluctuates. Yeah, but
for sure. And as we go fall and December, fall to winter months, every inventory
slows down.
You're not choosing to list your home during this time of year unless you have to. So this is the season in which we do see listings and inventory tighten up a bit. Right. Yeah. And so with that then, and we're kind of experiencing the same thing here too, where I think we're seeing not a lot more, but more inventory coming on the market, probably in general than your market is. Properties are staying on the market a little bit longer. Homeowners, and I think you touched on it just a little bit, is that they're pricing things maybe to what the market was 6 months ago versus what actually it is today. And they're really trying to stretch that dollar.
Yes.
but the person on the other side of the transaction is also trying to stretch their dollars to be able to kind of afford, and their purchasing power is down. So, it's kind of this weird little balance and a shift, and maybe it might still be a seller's market, but it's just very much leveling out and kind of teetering at the moment. So, I think before, our combo, we had touched a little bit on the interest rates and how that really is factoring. Have you had any buyers that just completely have stepped out of the picture due to the interest rates?
I do. And I don't know if you saw before, but I had a listing up with my buyers who were looking for something, and they've decided to pull it and just sit tight for a bit. I think that's where it makes people nervous of what's going to happen. And exactly what you just said. Let's stretch our dollar. Let's get the most we can. And if not, like, let's wait. And I think you and I also touched on the mortgage rates and what mortgage lenders are being a little more creative. I've had one of the mortgage lenders that I work with is offering, like a bridge loan. So while you get your home ready to sell, you could leverage that forward and do all of that, and being creative with, I know you mentioned they're doing.
Yeah, the 40, we're seeing 40-year fixed loans now, which is awesome. We're seeing, just 8 different lenders getting kind of creative, how they're doing their buy downs, and also developers being creative in how they're doing their buy downs. Sellers offering concessions just right out the gate, saying that they'll, cover closing costs. So, I mean, people are being realistic and kind of moving to the market to make sure that they are helping the buyers where they can.
Right.
It will be interesting because I think there's some more products that'll probably come out, and whether or not, and it's just brainstorming with someone the other day, was like, maybe it's some sort of interest balloon payment that when you sell the property, then all of a sudden, like, the lender gets a lump sum, right? Or I don't know, they could be very creative in how they make this work to continue to keep the housing market moving forward versus just completely, creating a little bit of a halt or a freeze.
Right.
Which no one wants. We all kind of, I think, at the end of the day, and you could correct me or tell me kind of your experience, but when you get up here, we were getting 50 to 70 offers on homes, and it was escalating anywhere between 600 to even $1 million above asking. Wow. You just kind of are like, and you have good buyers who have good jobs, and they have either maybe even cash or really good financing. And they can't get into a home. I mean, that's just kind of like, all right, something's got to give and things have got to shift. And so we're at that point. It's just that it's that knee-jerk reaction to, the interest rates rising, and now their dollars purchasing power is lower, and you feel like you're throwing that money away. Like it just, interest, you're just throwing it away. Yeah. But I think it'll become more normal, and people will be creative, and we'll continue to kind of move on. We're just kind of in this weird little space.
Yeah. And as the economy is trying to shift out too, as the price of everything goes up, that's where, when your mortgage payment would be higher, it's what is your cost of living and what can you really afford? And that's what I would suggest to home buyers, is really look at your finances, talk with your mortgage lender, or figure out where you can realistically spend and what that monthly cost would be, to then start looking in it. And it might be homes that you're like, this isn't worth it for me at that point, or yes, it is, and this is a good investment, versus renting, or getting out of we've got the millennial generation, right? That is now larger than the baby boomers as far as getting into this home buying market. And we're kind of passing through that, and they've starting families or getting on the second kid and all of that, where they need to expand and get into something. So they're having to figure it out.
They are. And actually a lot of them are, I've had a couple transactions here just recently where kind of that same scenario, their parents are actually the financee of the property, right? So they'll purchase it in cash, and then the kid is, paying back their parents, right? Or they go in partnership on it, just to make it easier for, getting into the market, the interest rates getting past them and all that sort of thing. And I think the cash buyers are definitely coming out. I've seen more cash this year than I had in former years, and that makes sense because people are just wanting to bypass the interest rates, but they also have cash.
Yeah.
Right.
Yeah. And the people that have cash, I mean, that's where, making a smart decision about the value of a home. And here in LA, I can't speak for Seattle, and you can tell me, but there's generally an appreciation that will happen. So your home is going to appreciate naturally. And that's where, again, the interest rate makes a difference. But if you're all cash, great, go for it.
Yeah.
And touching back on something you said of, I had a client more in the $3 million range. We're talking, I think we closed in April. Also a completely different time where you've got you were saying how the sellers are making concessions. This was at a time when they're getting 20 offers, all over asking, all cash, with no contingencies, no inspections. And that's where you're thinking, how can you get into this? This is an all cash. But you want to do the inspection period. You want to do it the right way. And I'm glad at least we're seeing a little leveling of not so many, because you want your buyers to feel safe and comfortable buying a home.
Yep.
and making sure they're making the right decision.
Totally. It's just been so crazy. We do a lot of pre-inspections here. And so and that doesn't allow the buyer to have their own inspector, although there generally is that time period of like the review period, right? And I know that you guys do that too. You don't, Arizona, believe it or not, there's only a few brokers that would do it down there, where you throw it on and do a review period, or you do your due diligence up front. Right. So that was really funny, entering that market this year, as a broker and going through the transactions and seeing what was happening down there. Cause I was always like, why aren't you guys doing this? So this will help you, because they get into contract with someone on the second or third day, do their contingency, and then all of a sudden they fall out of contract. So you'd had homes that had multiple buyers at the beginning that would fall out of contract 5 to 7 days later, and they're kind of just like a dud in the water at that point.
Right.
So didn't really make sense, but that's just a little side note of how different the markets could be.
Different market in a different area. And
exactly. But yes, as a buyer now, you can go through that process, it seems, where, you are doing your own due diligence, and we're still seeing seller procured inspection reports, because I think that does make it easy for the seller to know what to expect, but also the buyer coming in, and they could choose what they want to do, if they want to do their own, or if they want to just go by the one that the seller procured. So we're still seeing that, which is, I think, a trend that we'll kind of keep. So in that 3 million so are you seeing a shift then also in inventory in the higher market, higher price ranged homes, or are those pretty much, that market's pretty consistent?
If I'm, again, the price range is probably different when I'm saying higher or lower for that. I guess I'm referring to the higher being 9 million and above, which is so funny to say, $9 million.
Yeah.
But that $3 to $6 million is a unique range. And then there's the different categories below that. But the $3 to $6 million range, I would say that inventory seems pretty stable here. If I'm talking about areas of, you've got families that want to live and stretch your dollar further, instead of it in Beverly Hills, you're probably buying in the Valley, the Valley being Sherman Oaks, Studio City, Toluca Lake, that area, Encino. And those are single family homes, nice neighborhoods, good school district, and you can get a little bang for your buck in a very nice home in that price range. Your question was, is the inventory?
And what area was that again considered?
In the Valley. From like Encino to Burbank, basically, I would say. Maybe even farther west, but that's where I was focusing on for a couple clients specifically.
Yep.
And in that $3 to $6 million range, I think that's a little bit more of a couple months ago, I don't think that was going extremely over on the over askings for that. It was a little bit more calm. And now it's shifted into probably a stable. They're sitting there a little longer. And that's the thing, is the homes that are selling, there's a reason. The homes that aren't are sitting there because it's just, okay, maybe it was overpriced, or there's something wrong with it, or just
not as appealing,
not as appealing for all the reasons.
Exactly. And all that sort of thing.
That before it was, who cares? We're just buying it and we're just going over.
Yep.
So now that it costs more to buy your home, costs more to borrow the money, people are being a little more discerning.
Yeah. And also the looming economy, just everything in general.
Exactly.
So it's taking everything in consideration.
Yeah,
so,
exactly.
Yeah. Very cool. As far as kind of like up and coming neighborhoods or things that you see as far as investor potential, because we're starting to see a little bit more investors in our market here. And that's because, again, the way, it's kind of cooling down, people are speculating that this might be the time where they're starting to kind of come out and look.
Right. And I think investors are starting to get creative with some of their financing and the way that they work and what would be interesting. I had a conversation with a developer recently, actually, that we're talking about, rents in LA are continually rising and that's going up. So the cost for them that, it takes a year to get permits and planning and then develop a property. But if you're getting into the multifamily home situation, a great investment, because you will continue to get rents that always are rising for that. So if you can so they're being more creative with their financing to then purchase these properties to then build on.
Yep.
An area that I think here in LA, we just built SoFi Stadium, or the city, SoFi Stadium is new. And that's in this area near Inglewood. So I would say there's a couple of neighborhoods in that area, east of SoFi Stadium, that are, I'm seeing a lot of movement there of people buying homes. And all of a sudden I'm seeing all these new builds or completely renovated, a little cookie cutter, I shouldn't say cookie cutter. Some of them have been just remodeled. Otherwise it's just a brand new build. And you can see that neighborhood kind of changing around. And I would think that's going in a trend. They're building a mall nearby, an outdoor mall. So as that area kind of grows and develops now that stadium is there, I think that's going to be a hot area.
Hot spot. Yeah. And so then when you touched on multifamily, because you guys have the commercial aspect to your office, do you guys touch on the multifamily? Is it more like office, commercial, retail?
We're more office space, and primarily we have a large roster of production companies. So it's that type of space, mostly office. And that's seeing an interesting change of, as we know, the pandemic did a whole bunch of different things and people stayed home and offices weren't being used. And now we're starting to see people kind of coming back to work and offices deciding, hey, we need that space and we need to house our employees or have a place for them to go. And that's trickling back.
Yeah, and that's a good topic to touch on, because obviously with our market here in Seattle, I mean, we're just so much smaller, right? Like,
I mean, these are a big market.
Yeah.
LA is vast, but
yes, it is. But I'm just kind of speaking to like the downtown core, where the majority of, let's say, the office buildings that you have, and then the housing that's around it, with the talk of like, you know, coming back to the office, because obviously we have Amazon right downtown here, and we have a couple of their key buildings and companies that operate downtown. And when they, and they're not yet back, and there is this controversy of, oh, are they coming back? Are they not? Like, what's it also doing to the livability of downtown with all of our street spaces? So our restaurants and little stores and stuff closing down, we're seeing that reopen. Like we are in a far different place than what we were even 6 months ago, which is great. But you go to Amazon campus right now, and it's, probably 30% of what it used to be in terms of the crowds for all the lunch spots and just walking around. I mean, it's getting back, but I'm wondering, in your market, where is that downtown hub, or where, I mean, is there?
This is a funny thing. My aunt said this to me one time, of LA is one of the only cities in the United States that downtown isn't the general downtown hub, like in most other cities. We have so many other little pockets and areas. But I think, I guess what I could relate to of what you just said of where the areas are and where it changed or affected or shut down, I mean, in plenty of the different areas and neighborhoods around LA, but specifically, Santa Monica and Venice really saw an uptick in homelessness or unhoused people, and just crime, and the restaurants shutting down and shops shutting down, and all of that changed and certainly the tourist area, if you will, that slowed down significantly during the pandemic. Then it just shut down, was quiet. And
so that was pre-pandemic that you were starting to see that, or during?
I feel like during the pandemic, that's what happened. Then for a while, it just got kind of, it wasn't great. It wasn't being cleaned up or kept up. Now, Venice did a big cleanup recently, and I feel like that area is starting to come back alive. I've noticed in Santa Monica and some of those areas around 3rd Street Promenade and whatnot on Ocean Avenue, also coming back to life, more stores starting to open up. There's still a lot of vacancies in that commercial space there. And it's sad to walk by, drive by, and see all these boarded up places or just vacancies. We want everyone to come back, but
so it's funny you said that, because I did actually, visiting my sister, she's and when we went through Venice, and I think this was in January 2021, it was kind of like, oh my gosh, crazy on the boardwalk, right down
Right.
at the beach, like just nuts, tents on the beach, and just like it looked like chaos. Which to me, I'm like, well, that looks like our Third Avenue.
Right. Exactly.
um, and so then when we were just down there a couple months ago, we were down in Venice too. You could definitely tell that things have cleaned up a bit.
Yeah.
Like, the vibe is a lot different. I think the storefronts on Abbot Kinney is Venice.
Yes. Yeah.
Yeah.
Venice.
Still learning.
Yeah. Well,
So
we all went out, right? In
yes,
Venice.
yes.
That was Venice.
Right.
And
Exactly.
that felt definitely like the vibe was back, and there was a lot, the nightlife was getting a little ramping up. Yeah. And it had been a little quiet for a bit.
Yeah. But the commercial space is still in Abbot Kinney, like it's a hit or miss, whether they're open and what have you. So yeah, I mean, I think every downtown urban environment is experiencing the same thing when it comes to the in-house, when it comes to the commercial spaces, the mom and pop, starter businesses on street level commercial spaces, all that sort of thing. So it's just how quickly, I guess, the cities, municipals, and the community, reacts to help the community.
Yes, for sure.
Yeah. Well, that's good. What else can we touch on? So we talked about a little bit about investments in the market, kind of just general. Is there any speculation kind of going into 2023 on, have you heard anyone in your market kind of talk about where they think everything's heading for LA?
I feel like I was talking with Lee about it, and then also just reading, the stuff that comes out of watching what the home trends did. And it's kind of what you and I already touched on. I think there will be a leveling out. I think as the Fed continues to have the rates seemingly on the trend of staying up, the price will adjust. And I think at some point, there will be a leveling of the prices and probably swing into a buyer's market at some point.
Yeah. And I think some markets around the nation are experiencing that already, right? They have the last 3 to 6 months. And I know Seattle here, we're already seeing prices come down and concessions, and just, it's a leveling. Basically it's, and I know all the, if you dive deeper, like, oh, is this like 2008, 2009? And, it's not the same climate whatsoever. No. So there are some doomsday people out there
for
that,
sure.
Oh, it's definitely going to drop. And it's just not that nature of things. But God forbid something doesn't, escalate externally that we don't have any control over, but we made it through the pandemic.
Barring another pandemic. Yeah.
And that kind of artificially inflated, I guess, the market a bit too.
I think you're right. Yeah.
Right. So you think about it and it's like, well, that happened and, values went up. So even if you come down, you're still, a lot of these owners are on the up and up if they purchase prior to, right. And you just wait for the next, thing that to happen.
And I guess that's the only thing I've noticed as a trend or forecasting that I've seen people talk about is that home appreciation values are still going up. Mm-hmm. And so that's a different thing. Again, not the doomsday outlook of, and yet also weird because it's not that the home prices are going to necessarily completely drop right away. You've still got this rise in appreciation. And again, and the rates are still going up. So there will just be this teeter, but.
Yeah. So our numbers just came out here for King County. And King County and Seattle and Bellevue, they all had increases in values year over year. For this last month. However, inventory had increased and the sales have went down, right?
Okay, yeah.
So that's where you kind of think, well, what is that difference? And I do think that the higher end homes are selling. And so that's pulling the values up a little bit. The inventory that is maybe the mid to low inventory is the inventory that's suffering the most because the buyers of that product are suffering. Yeah. So, I think that of any market, I mean, that's really what happens is the higher end market, and our higher end is different than your higher end.
Right.
But
it's part of that.
Part of the whole equation. Yeah. Right. And so it stays pretty consistent. So, I was going to kind of dive into some more numbers and just see if I could kind of figure out like if that is true or not. But that was just kind of my little like spin on why that would be happening, or just purely things are moving, just not as much. And the things that buyers don't want are just sitting there.
So I would argue that that's the same here from the numbers that I was looking at is home sales aren't as many, but not hugely. And the appreciation is still there and the value is still there. The inventory is slightly less.
Yep.
Sales are still occurring,
Yeah.
just not as rampantly. And I think not as rampantly over asking.
Over asking for sure.
Now you sell a lot of condos too in that area.
Yeah. So I do
kind of feeling on that.
So the downtown market's interesting, and it definitely trails behind single family. So the beginning of the year, we started kind of experiencing multiple offers, and and inventory was pretty low. And inventory right now for downtown Seattle is low. It's not high. So I'll give you an example right now as far as resale. So not talking, we have about 5 new construction towers.
Okay.
Take all their inventory out. Resale number wise, we have about 150 active condominiums, give or take. And that number though, during the pandemic was like right around 350 to 375. So if you kind of look at that, our number, we're still, a tight market. Things are moving, but just a little bit slower. Our numbers for downtown condos, unfortunately for values, was down year over year for this last month. But we are seeing a lot of sales all over the place from, 300,000 for little studios on up to, I think we had a 9 million sale, definitely a 6, maybe a 9 last month. So,
oh, wow. Great.
Yeah. So it's just, I think it's hit or miss. The buyers are out there if they have a need. And as the rental rates, because here we are experiencing that too, rental rates are up. I think all of our agents right now are kind of experiencing this little seasonal dip as we normally do, kind of in that late October, technically through December, things kind of shut down in our market. It's just the inventory is lower. Not as many people moving around if they don't have to.
Right.
So we are seeing that prices on the rental side might be kind of leveling a little bit. But we've seen a fluctuation in our new construction apartment inventory downtown. So whereas condos have been pretty tight, now we have apartment buildings. We have 4 or 5 huge Canadian-based developers that came in and built these large towers. And we have kind of these units that are coming all in the same, actually like literally the same little block. And they're all kind of competing with each other, and they're great products. I mean, it's nice apartment communities. It's not like the shoddy apartment construction we used to talk about.
Right.
So,
and are these full service buildings that you said?
Full service. Yeah. Actually, in one of them, we just toured the other day. It's called the Modern. It's right on 3rd and Lenora between 2nd and 3rd. It's a company from San Francisco. It's called the Line Real Estate. It'd be interesting because the building used to be a We Live. That's how they built it. But obviously, we know what happened with We Work, We Live in that time. So they gave the building back to the developer here in Seattle. And then they hired a line to come in and actually reconfigure all the floor plans. Like they actually reconfigured everything and built them out for apartments. And then now they're doing the leasing side of it. Wow. And then they have services. So they have a huge bar up there on like the top floor. And right now, until they get their liquor license, they're just open like Friday and Saturday. Residents can go up there. It's like, free booze, and you just have your bartender up there, and they have mimosas on during the day, and bagel bar, and like all that stuff. But they also have personal trainers, and it's a little bit more of an elevated experience. I don't think our downtown, like just urban living, has experienced before. So it'll be very interesting to see how that's received.
Now, what's the price point on?
Not bad. I'm telling you, yeah. And it's because the concessions with a lot of these buildings right now, they all kind of came up 2,500 plus. I'm sure there's a different stat, but I think that's where it starts at. As all coming to completion around the same time. And so they're trying to get ahead of it. So they'll offer 8 weeks free, and if you're $7,000 a month and you're offering 8 weeks free, that's a pretty dang good rental rate for a 2-bedroom. It's 1,200 square feet, including parking downtown.
Wow.
Brand new. So I think
the amenities that come with it.
The amenities that come with it too. So we're seeing a lot of that. And that does impact the condo community as far as sales values, because renters coming in, gravitate towards whatever is the least expensive that they get the most out of, especially in a time like this. However, I think the condo, we don't have, if you're living downtown, want to build your wealth, want to get into the market, now is a really good time to do that and take advantage of kind of what's going on.
Yes.
So I do believe that our market next year, first quarter, we're going to be a lot stronger than where we're at right now. We're just kind of finishing off the year, and we had a very, very strong first half of the year. So we're just fourth month into kind of being like, meh. September was super strong. So it's kind of just hit or miss. Our market's kind of funny and fickle. When I compare the two, I feel like our market is a little bit more volatile than what LA is, because, you guys are so vast, and, there's just a lot more going on. But
it's interesting though. And I ask about the condos because I feel as though, and I have another client that's looking a little bit more specifically in the condo section, but West Hollywood seems to be an area that's kind of coming back alive again. Also somewhere that a little bit shut down or just got a little different during the pandemic. And as people were looking for more space and kind of getting out of the city life, now these condos were available. And I think now, as you said, as a good investment opportunity and time to jump in, condos are kind of back on the market or something to be considered, in including when you're
affordable
for something. Right? It's affordable.
So you can't buy that house that is, 2 million, 2.2, but you can buy the property that's 1.1.
Exactly. So your dollar might stretch farther. It's a little less space, but it's a little less to maintain. The thing to factor in, at least here in LA, specifically different pockets of LA, would be the HOA fees, because there are certain condos where the HOA fee it's a mortgage payment. It's astronomically high. And then that's where you, as a buyer, level out what are the amenities that come with this? Is this just your earthquake insurance and maintenance of the building, or is this a pool and a valet and a gym and the rooftop bar and all those kind of luxury amenities? That's a different sector.
Totally, for sure. And there's different people that like that, and different people
Absolutely.
that don't. It just depends on the client's needs and what they want out of their living space. So good. All right.
Yeah.
Well, I think we've touched on so much.
Yeah, we have touched on a lot. And I think you do your featured home of the week or featured Friday. I sent you, my buddy Zach Goldsmith has that listing in Venice. I thought you would specifically.
Oh yeah. Right up our alley.
Right up your alley, right up Mark's alley.
Yeah. He's a big fan of West Hollywood too.
Yeah. And I just thought that home would be kind of fun to feature or to send to you, because it's so art driven. Very cool. And
that's Venice. I know
that's Venice.
I note of him and his love for West Hollywood. But
right. But I just thought that was kind of fun. And Zach and his team have a cute little video up on their Instagram or on the thing of kind of walking through it and talking about
really? I'll have to post that.
You'll have to check out that, because it's pretty great.
Very cool. Good. Well, thank you, Alicia. And maybe we'll plan on checking it again in 6 months or so, just to kind of
see how it's shifted.
Shifted. And of course, if I have any clients that are looking in that area, I'm definitely going to refer to you. As the one to go to. And I hope
in fact, I think my brother might be looking soon. So he has your number.
Nice. Thank you. Well, good. I hope you have a wonderful weekend.
Thank you. You too. And thanks for having me.
You bet. We'll chat with you soon.
All right. Bye.